You are live.
Good morning, everyone.
Good morning.
I am going to officially call this meeting to order and then turn things over to Pam to do a roll call.
Thank you. Chair Wright,
Oh, I'm here.
Regent Porth, expected but currently absence is noted, and Regent Santiago, welcome to the committee.
Thank you.
I'd like to recognize Board Chair Ryan. Good
Good
morning.
morning, everyone present.
And Regent Wright, you have a quorum.
Okay, I'm going to hold off on the approval of the minutes and see if Regent Porth joins us, and maybe go directly to the discussion items. And I should let everybody know I have to drop off at 11, but the meeting may continue at that point. Okay, so now I'm going to turn things over to Melinda, I believe, for the audit update.
So the first item is the APA audit update, which is the auditors of public accounts. They did release the statewide federal single audit and released it on March 29th of this year. This audit looks at the compliance of federal grants statewide. Within the report, there were 3 overall findings related to the CSCU system. One finding was related to cash management. One college held excess federal funds longer than allowed. Corrective action was put into place to address this finding. Another finding was related to the return of Title IV funds. A college and a university used an incorrect enrollment period in its calculation for the return of the Title IV funds after the students withdrew. Again, corrective action was put in place to address this finding. And the last finding was related to time and effort certifications for one university who did not certify the reports to provide confirmation that employees worked on the relevant grants. And that issue occurred because of a temporary staffing shortage, and that finding should also not be repeated. The APA is, was there a question?
No, go ahead.
Okay. The APA is currently working on the financial audits for the 2021 and 2022 fiscal years for the system, and results are not expected for quite some time from that. If there are no questions on the APA audits, I will move into the management update.
Any questions? Okay, we can go to the management update.
Okay. So System Office has been busy working on the Connecticut State Community College merger, especially the transition of the accounts receivable banner financial system. We are moving the accounts receivable module, including student billing, collections, and refunds into the new One College banner environment for fiscal 24. Like last year's transition for finance, this AR transition should have no adverse effects on the fiscal 23 flows. For a quick accounting standards update, GASB 96 and GASB 101 will be implemented this year. GASB 96 is similar to last year's lease standard, if you recall that, but it's for subscription-based information technology arrangements, or SIBITA for short. These arrangements allow us to purchase and use a third-party software, and these will have to be brought onto the balance sheet if they meet certain criteria. It is required for fiscal 23. And similar to last year, because of the analysis that's required for each and every contract that may contain a SIBITA, to ensure consistency in data extraction and accurate evaluation for the initial implementation year, Grant Thornton's advisory team is again assisting in extracting and compiling data from the contracts and the POs. They will not be performing calculations for the entries. That is management's responsibility. I believe Grant Thornton will go into this during the presentation, so we can discuss further at that point if there are any questions.
Okay. Any questions?
Yeah. Oh, any questions on 96? Okay.
Okay.
And a quick overview of GASB 101. So GASB 101 is titled Compensated Absences. This standard is not required until fiscal 25, but early adoption is allowed. And management has decided to implement the standard for fiscal 23. GASB 101 clarifies and Plan consistently applies the compensated absence liability calculation to lessen potential comparability issues between governments and differing types of leave. The effect on our calculation is to remove the impact of the pension plan contribution to the vacation time payout calculation. So historically, the liability for vacation time was calculated by adding the vacation time payout plus the impact of the pension plan contribution. That was a conservative approach, but according to this new standard, that should be excluded. So the estimated impact, which is based on fiscal 22 numbers, is approximately a $23 million decrease in the accrued compensated absence liability. And that concludes my report, but I'm happy to answer any questions.
I'm just curious, the 23 million, what is the relationship between the 23 million and the original amount when we used to calculate them all together, the liability?
So that is across the system. The total across the system accumulated compensated absence liability for fiscal 22 was about $112 million.
Yeah,
So now it'll be $23 million, about $23 million less. So that would have a positive impact on our unrestricted net position by not having to record that liability going forward, that additional liability.
Okay, I knew the original number was pretty big.
Yes, it's very large.
Any questions or comments? If not, thank you, Melinda.
Thank you.
So next on the agenda is the bond audit planning presentation by Cohn-Resnick.
Yes. So unfortunately, Cohn-Resnick is not able to attend this morning. I received an email earlier this morning saying that they were not able to join us, but they did submit their presentation, which is included in the packet. Please do make sure to read through the planning presentation they provided, as there are required planning communications to those charged with governance, which is this committee. So it's important that you do read through. And if you do have any questions, please let me know and I can send them over to Cohn-Resnick. Carolyn Kurth, a partner, noted that she did not have any concerns about planning or timing, but if you do have any questions, I'll be happy to convey them.
Okay. I don't see any hands raised. I don't hear any voice, but thank you. So then I think I'm going to turn things over to Claire.
Great. Good morning. Thank you, everybody. So I'm here with my manager, Dave Stoffel, and we are going to present our plan for the audits of the universities, the community colleges, and Charter Oak. The thought here, the objective is to preview this plan with you now. If you have any concerns or questions or other areas that you think would be important for us to focus on during the audit this year that we haven't considered for some reason, we would appreciate your input. And if it doesn't come to you now, there's plenty of opportunity to reach out to us another time to share your perspective with us. We had provided some materials in advance. I don't know, Pam, do you want me to, or Chair Elise, do you want me to put those on the screen, or I can just speak to them? How would you like me to proceed? I am now the presenter. Okay. I take that as a hint.
I just want to make sure, Joanne, do you have a copy of the presentation?
No, I don't, but that's okay. I'm
So
listening.
then let's put it on the screen so
Okay, thank you.
everybody can see it.
Thank you.
Okay. Great. So everybody can see this now, my screen?
Yes.
With the slides. So our timing is generally the same as it has been in the past. We've started our planning procedures. We've had some discussions with management about what's new and different this year. Obviously, there's a lot new and different every year, but really we focus on the things that are going to impact or manifest themselves in the financial statements of the three entities, and then how we might consider that in our risk assessment procedures. So we've had some good discussions with management. We'll start doing some interim work focused on getting an understanding of, or updating our understanding of controls, as well as doing some selective substantive testing, such as testing tuition revenue and fee revenue and the related scholarship discounts that we do in like the May and June time period. And then we'll come back right after Labor Day and do our year-end field work at the campuses and then the community colleges and Charter Oak at the same time, with the intention to meet back with this committee in December, right after Thanksgiving sometime, and present the results of the 3 audits and issue our reports before the holidays. So the next couple of slides go through our significant risks and other areas of focus. They're very similar to what we've focused on in the past. So I won't go through the details of it. And some of it is they're similar because we're always going to test things like tuition and fee revenue. We're always going to test the pension because of their materiality and significance. I did want to just call out at the bottom of this page here 2 new GASBs, which Melinda already previewed, which was helpful. Because those are both being adopted this year, and we expect there to be, somewhat of a material impact on the financial statements related to the adoption of both GASB 96 and GASB 101. We will spend some time in the audit, both during interim and at year end, testing the entries that management will book associated with the adoption of these 2 accounting pronouncements. And Melinda did allude to the fact that we are sort of a separate group within Grant Thornton, under my overall supervision, but separate from our audit team, is assisting Melinda and her university controllers associated with the adoption of GASB 96, because there is sort of this volume of contracts that need to be read through, and making sure that the proper data is extracted to form the basis for the accounting, the adoption entry related to GASB 96, which is basically, again, as Melinda alluded to, a balance sheet gross up similar to the adoption of the lease standard. So that's all underway. We've made sure we have the appropriate safeguards in terms of our independence. Obviously, to us, that's very important to maintain our independence. But ultimately, as Melinda alluded to, one of the important safeguards is that we're not actually calculating the entry that needs to be recorded for the adoption of GASB 96. We're assisting with training and review of information that management is gathering, but ultimately they take responsibility for the accounting. That's the primary safeguard. So we'll report back to you in December with respect to the results of our audit procedures on these 2 new GASBs and any observations we have. The next couple of slides, well, I think I've talked about this, where we're providing assistance with respect to GASB 96 and the importance of the safeguards in place. And actually, I think that covers our required communications. There is some additional material in here. Particularly, I just wanted to call out that we do provide some industry trends slides, which hopefully the committee has had a chance to read. There's always a lot going on in higher education, and both internally as well as external factors that we're seeing, and we're seeing our audit committees talking about. I know you'd mentioned earlier that there's a discussion on cybersecurity. We did have a couple of slides. I know I'm flipping through this very quickly, but we did have a couple of slides about IT in general and budgets and cybersecurity, cyber risk, digital transformation, experimentation, and then also things around like what kind of budget do you have, what kind of insurance, or what kind of budget do you have for IT investments in cyber, what kind of insurance. So just wanted to share that more as informational. Does anybody have any questions on our audit plan?
I'd only comment, it's very thorough. We've moved to a very good place over the years. I think thanks to management and thanks to Claire, you and your team, which is a very good thing. And I always find the information you send on the industry very helpful to get a sense of what's going on and how things are evolving and changing. So I thank you for that too. So, I have a question for Pam, if is she still, oh, there you are. Can we vote on the minutes without, okay, so,
You
all right.
have a quorum with you and Ari.
Okay. So then I'm going to make a motion that we approve the minutes. If I can get a second from Ari, got a second? So all in favor? Aye. All right, the minutes approved. So Melinda, Ben, any other business before we go into executive session?
No.
Okay. So, before I call a motion to move to executive session, let me state that the committee will move to executive session for the purpose of security issues. No votes will be taken in executive session. Additionally, there will be no discussion, action, or votes by the committee following executive session. The only action following executive session will be a declaration of adjournment by the chair. CFO Ben Barnes, Melinda Curanes, CIO Jim Vasquez, and Information Security Officer Peter Carey are asked to join the committee in executive session. Therefore, allow me to call for a motion to move to executive session for the purpose as I've described, and to adjourn by declaration of the chair when that discussion in executive session concludes. May I have a motion?
Motion moved.
Okay.
Sorry.
That's okay, and I'll second it. So all in favor?
Aye.
Aye. All right, so
So we'll say goodbye, I think, at this point.
yes, the open portion of our meeting has concluded, and so the live streaming will end. So
All right.
thank you.
Thank you.
And-
Have a
and
good
your-
day.
Your
All right,
live
bye-bye.
stream has